I will now turn to liquidity and financial market conditions. System liquidity as measured by the net position under the liquidity adjustment facility has been in surplus on an average of about 3 lakh crore rupees per day since the last MPC. This is in comparison to an average daily surplus of 1.6 lakh crore rupees during the previous 2 months. Going ahead, as the CRR cut announced in last policy comes into effect in a staggered manner beginning September, it would further support liquidity conditions. The comfortable liquidity in the banking system has reinforced transmission of the policy repo rate cuts to the money, bond, and credit markets during the current easing cycle. In the credit market, the weighted average lending rate of scheduled commercial banks declined by 71 basis points as against the 100 basis points rate cuts for fresh rupee loans, and of this, 55 basis points is due to interest rate reduction, the remaining on account of the change in the mix of the loans. Further, on outstanding rupee loans since February 2025 to June 2025, there has been a 39 basis points reduction in the weighted average lending rate. On the deposit side, similarly, the weighted average domestic term deposit rate on fresh deposits moderated by 87 basis points during the same period. Moreover, the transmission to lending rates has been broad-based across all sectors. Going ahead, the Reserve Bank will continue to be nimble and flexible in its liquidity management. We will endeavor to maintain a sufficient liquidity in the banking system so that the productive requirements of the economy are met and transmission to money markets and the credit markets remains smooth. Here I would like to take a moment and mention, while we are on this subject of liquidity, that an internal working group, as some of you may be aware, had been set up by the Reserve Bank to review our extant liquidity management framework, which has been in operation since February 2020. It had been 5 years. So this working group was set up. It has submitted its report, and we will be shortly publishing the same on our RBI website for public consultation. The group broadly has found that the WACR, the weighted average call rate, is highly correlated with the other money market rates, with TREPs and market repo in the collateralized segments. Further, they have also found that it is effective in transmitting signals to other money market instruments across maturities. Therefore, the group has recommended continuation of the overnight WACR as the operating target of monetary policy. The group has, inter alia, also recommended to continue with the variable repo and reverse repo rate auction mechanisms of various tenors with the objective of maintaining the operating target rate at the policy rate.